Hey everyone, welcome back to Corporate Decoder. Today we're diving into a proxy statement, which might sound boring, but trust me, it's like peeking at someone's cheat sheet before a big exam. We're going to decode Enveric Biosciences, a company that's trying to treat mental health conditions. They're asking shareholders for some important approvals that could determine their future. So grab your decoder rings because we're about to uncover what's really going on. First up, the annual meeting. Think of it as a school assembly where shareholders get to vote on important decisions. Enveric wants to elect 6 board members, get a thumbs up on their executive pay, and most importantly, get the go-ahead for something called a reverse stock split. They also need to ratify their accounting firm. Now, about that reverse stock split, it's like taking a bunch of small Lego bricks and combining them into a few bigger ones. Why do it? Well, Enveric's stock price needs to stay above $1 to remain on the Nasdaq stock market. If it dips too low for too long, they risk getting kicked off, which isn't good. So if the stock price is too low, they might do a reverse split to artificially increase the price, which is a signal to investors and the stock market that the company is worthy of more investment. But here's the catch. Nasdaq has some new rules that make it harder to do this. If Enveric does a reverse split, but their stock price still falls below the minimum, they might not get another chance to fix it later. That's why they're asking for permission now, just in case. Otherwise, they would have to ask again, which could take weeks. Also, Nasdaq might decide that despite the reverse stock split, the company cannot comply with their requirements. What happens if shareholders say no to this reverse stock split plan? Enveric could get kicked off Nasdaq, which isn't a death sentence, but it makes it harder to raise money and attract investors. If the split happens, it will affect all shareholders uniformly so that everyone owns the same share percentage as before the event. Let's talk about who they want on the board. It's a mix of people with experience in biotech, finance, and healthcare. People like Michael Webb, who's the CEO of another biotech company, and George Kegler, who used to be the CFO of a pharmaceutical company. These are the people steering the ship, so it's important to know who they are. The company wants directors with qualities like integrity, relevant experience, and public company knowledge. They are also aiming for diversity of gender, race, and national origin, education, professional experience, and differences in viewpoints and skills. Moving on, the board has committees that focus on different areas. The audit committee keeps an eye on the finances. The compensation committee decides how much the executives get paid. And the nominating and governance committee finds and recommends new board members. There is also a science and technology committee that is meant to oversee ongoing updates to the company's research and development efforts. Speaking of pay, let's look at what the directors make. Michael Webb, as the chairman, got $19,548, get between about $4,000 and $8,500. It's not an insane amount, but it's good to know who's getting what. Also, it is worth nothing that they are rewarded with stock. Now for the executives' pay. We have Joseph Tucker, the CEO, making $653,333 in total compensation. The Chief Innovation Officer, Peter Ficini, is making $2. Financial Officer, Kevin Coveney, is making $470, $100, and $100 by fund. Coveney is making $470 and Twarse and Ruddy of their yearly income seems to come from salary and not performance-based bonuses. It is also worth noting that at the end of the year, some of these executives also hold unvested RSUs, which are basically promises for stock once certain conditions are met. They are worth about $5 a share. Enveric says they don't try to manipulate when they release important information to affect executive pay. That's good because it would be illegal to do so. This table is interesting. Let's try to distill some key points. It shows the relationship between what executives are paid and how well the company is doing. The first line shows how much total compensation the CEO and other high-ranking executives received. We also have another row titled Compensation the CEO and other high-ranking executives received. We also have another factor to attempt to measure the actual compensation. In 2024, the CEO made $633,000 according to normal measurements, but according to $33 according to 5T335 according to normal measurements, but according to $33 according to normal measurements, but according to $333 according to 53.3 according to normal measurements, but according to $33 according to normal measurements, but according to 333 according to normal measurements, but according to $33 according to normal measurements, but according to 3 according to normal measurements, but according to $33 according to Fission 26. We also see on the right that net loss is almost $10 million. You don't need to have any background in finance to know. There is also the topic of related party transactions. One of the board members, Dr. Sheila DeWitt, has been providing research and development consulting services to the company on an hourly basis. She's been paid $23 So what are they asking shareholders to vote on? They want them to elect directors, approve the executive pay, give the go-ahead for the reverse stock split, and approve their accounting firm. It's like a checklist of important decisions. Finally, they need shareholders to approve their independent accounting firm. We also get to see how much the accounting firm Markham was paid. About $2 or $1,000 for 2024 and $375,000 in $2,500 in 2014 in 2015, getting more expensive, or the company may have needed more work done. There is also an adjournment proposal, which essentially means they want the ability to delay the meeting to get more votes. This could be a red flag that they are not sure if their board picks will even be approved. The largest shareholder owns just over 1% of stock, so they are mostly owned by retail investors like you and me. They have a code of ethics that all members must adhere to. In summary, the company has a rough road ahead to stay listed. They want to be able to implement a reverse stock split, which may or may not be successful, and the executive compensation seems to be based on salary rather than performance, which is worrying. So what's my take? Enveric is in a tough spot. The reverse stock split is a risky move that might not pay off. The key is whether they can actually develop successful drugs and improve their financial performance. Otherwise, they are simply delaying the inevitable. While their leadership has relevant knowledge and expertise, their actions need to translate into something palpable, which will have to occur soon. Thanks for watching. Don't forget to hit that like button, leave a comment, and subscribe for more corporate deep dives.